people understand what edge is, but I think oftentimes they don't understand how their edge works or how to use discretion in their edge. So we're going to use a very basic strategy, one of the strategies that I use just as an example to go through the understanding of edge and what it means to really understand your edge in a way where you can effectively apply discretion to it. So one of the things that we see a lot is that traders will pick up a strategy from YouTube and then begin trading that strategy, and sometimes they'll even trade it effectively. But without really understanding the underlying market mechanics that make their edge work. And what that causes essentially is a scenario where you can trade and win trades and make money and become profitable, but a certain percentage of your trades you'll always lose, and you'll never really understand why it is that you lost that trade. So I think the number one way that you can boost your win rate and subsequently your confidence while trading is to actually understand why your edge works and why it doesn't work and why the opportunity exists at all. So I'm going to use VWAP as an example. I know a lot of people trade VWAP or use VWAP as part of their strategy or use it as a confluence. But VWAP is a great example, and I think partially because it's similar to concepts like support and resistance, where it's a somewhat self-fulfilling prophecy. So the reason that VWAP works is it is the volume weighted average price. So it is a widely viewed point on the chart that is used by institutions and professional traders and just small time retail traders. Everybody is looking at this line, and it's the same line for everyone, right? So it's not discretionary like for instance, people that trade patterns, right? Maybe one person interprets a pattern one way and another person interprets it a different way. Or Fibonacci levels, right? Fibonacci, you could draw your leg for the Fibonacci measurement tool on any one of these legs of price action, and that's going to put the lines in a completely different place. So at VWAP, the line is the same for every trader, retail, institution, algo. Everybody sees the exact same price. So now the reason that VWAP works is because of the underlying mechanics of the market, and also that game theory psychology of all of the traders that are also simultaneously looking at it. So when I trade VWAP, I know that institutions are using this line as their execution benchmark, right? So they're deciding, do we want to buy or do we want to sell, and where do we do that in the context of all of the different price levels on the chart. When they look at how price interacts with VWAP, how close it is to VWAP, how much time it's spent at VWAP, how much time it's spent away from VWAP, how far away from VWAP is it in this moment. And you can see here on my chart, there's a number of different times during the day where these VWAP price levels get respected. So you can see there's a touch point right here. There is a mean reversion trade right here where we poked outside and then mean reverted back to VWAP. There is a failure to reclaim VWAP and a swing failure pattern down. And then we can go up here. Here is VWAP band 1 acting as dynamic support. Here it is again acting as dynamic support. So when I'm trading VWAP, I know a number of different things about the mechanics surrounding VWAP. I know that when price pokes outside of the second VWAP band, the reason why it is likely to return back to the inside is because of mean reversion, because VWAP represents fair value. And whenever we're extended away from fair value, the algorithms and many of the individual participants in the market are expecting price to be driven back towards it. So it creates a self-fulfilling prophecy where when we are outside of the second VWAP band, many of the algorithms trading expect price to mean revert back to VWAP. So they start placing trades that are in alignment with that. The same thing goes with retail traders. A lot of retail traders, such as myself, are sitting here and we're expecting price to pull back inside the bands. So when we're outside of the bands down here, I would go long on this position, and it creates a self-fulfilling prophecy where the order flow of the market actually shifts, and that shift is what's helping drive price back to that point. Now, the same thing goes with the dynamic support and resistance of using the VWAP bands. This is a decision point, VWAP band one. Whenever we have crossed through and then came back and now we're retesting it, this is the decision point where many people in the market are watching to see, are we going to violate this line and disrespect it and break down lower, or are we going to reject and continue higher? And the buildup to this touch point is bullish. So I think, most of the people who are watching the market are expecting a bullish reaction right here, and they place their trades based off of that. So the moment I start to see a slight bit of hesitation at the VWAP band, I tend to enter a long position. And because so many people are entering that long position, it is actually pressing price higher. But the underlying fundamentals is no matter what the object or point of interest or concept is that I'm trading on the charts, I have a really deep understanding of the mechanics that go into it. I know why it works, why it doesn't work, when it works, when it doesn't work, and what kind of results I should expect out of it. And those things really help me when I'm trying to use discretion to determine, is this trade going to play out the way that I think it's going to? Because as you can see right here with this VWAP band touch, we respected it in this case, and it acted as dynamic support and held price up, and we continued higher. But when we go to an area like this, it doesn't work, right? Price cuts right through it, and you see absolutely no hesitation, as if the line isn't even really there. And that has a lot of significance, because if you were somebody who is just expecting there to be a reaction every time we pulled back to the VWAP band, then you would get steamrolled on these trades. You would lose this trade, and you would lose this trade, and you would lose this trade. And that's why it's very important not to just pick up strategy and blindly trade it and then, enter into a trade mechanically every single time that strategy presents an opportunity. You need to be able to use discretion to discern between, is this a good opportunity or is it a bad opportunity? And I think to trade the market without having an understanding of how the concept you're trading actually works mechanically, like why are the other traders in the market respecting this concept? Why is price respecting this level? You're always going to be at a significant disadvantage. So this is true of many traders where they learn a strategy, they trade it, they get results. They have absolutely no idea why it works, and therefore they could not identify an opportunity where it wouldn't work. And then, a lot of times that dramatically affects their win rate or their performance. So when I first got into trading, I had a lot of questions that were rooted in trying to understand why the candlesticks were moving the way that they were, right? And I refuse to accept that this is just random price action and it's all just happening for no reason. It's just people pressing buy and people pressing sell. And when I started to look into it, it turns out there is a lot more to these levels, right? Why is it that sometimes we come up and sweep New York high, but other times we stop 3 points away, reject, and continue lower? Why is it that sometimes we sweep New York high and we shoot right through and continue, whereas other times we sweep New York high and we reject back down into the range? Why is it with volume profile that sometimes we exit volume, value area high and then reject, and when we come back down, we'll cross the whole volume profile, the value area low, and other times we just poke back inside and then continue along the way that we came? So underneath all of the price action that's happening every day is a complex set of mechanics powered by the objectives of a large crowd of traders, right? Everybody is acting in their own self-interest in what is essentially a zero-sum game. And that causes a lot of these levels to have more than one interpretation or more than one expected outcome. So, being able to identify, okay, why is this level important? Why is this pattern important? Why is this particular movement of price important? And how do I know when it's going to be that event that is going to give me an edge? And how do I know when it is not going to be an event that gives me edge? And being able to identify the difference between the two is really going to, take whatever your current win rate is and enhance it by quite a bit. So I know personally when I first started trading and I was using some of the concepts that I'm using today, I was getting 60% win rate, 65%. And then slowly over time, I got it to 70 and then 75 and then 80. And then now we hover somewhere between 82 and 88% win rate, because I can understand how all of these different components that I'm trading are coming together to form a bigger picture. So when I'm looking looking at VWAP mean reversion, like for instance, right here, where we poked outside of the second VWAP band, I'm expecting this move right here. I'm expecting this meltdown where we mean revert back inside and pull down to band one or maybe even VWAP itself. But being able to tell if this is the moment that it's going to happen, or this is the moment that's going to happen, or this is the moment that's going to happen, that's where understanding why price is doing what it's doing at all really comes into play. So I would encourage everybody, as one of the biggest things that you can do to improve your trading psychology and your win rate overall is to do research into your strategy. Take whatever your strategy is and go on ChatGPT or whatever AI platform you prefer and ask questions, right? Ask, why does this work? What other confluences could I use in conjunction with it to give me a better edge? What should I be looking for to identify a trade that uses this strategy that is more likely to play out? And what should I be looking for as far as one that is not? And then, even outside of your strategy, take some time to look up and understand some of the other things that are going on in the market, right? So maybe you don't trade fair value gaps, but do you understand why a fair value gap produces the results it does? Do you understand why a fair value gap is likely to get filled or likely to be rejected or likely to be inversed, and how to interpret those situations when they do happen? Because an example would be, maybe I'm in this VWAP mean reversion trade and I'm expecting this breakdown to happen, but we just inversed a fair value gap right here. Maybe that holds some kind of significance for how this event is going to play out. And I think when you get too hyper focused on just your one strategy that you're trading and you lose sight of the context of the market in which you're trading it, then a lot of times you get this really short-sighted or myopic view of the markets, or you get tunnel vision essentially. And, a lot of times there will be other confluences that are playing out that maybe validate or invalidate your trade, but you're completely oblivious to them because you're just hyper focused on, okay, price came outside of band two, we printed a swing failure pattern, it's definitely going to head back inside now. So really important to ask lots of questions, to really try to understand the market as if you were a professional. One of the things that's true about the markets is that there are some very smart people that are trading in here, and a lot of them have significant capital, and their objective is to turn your stop loss into their liquidity. You're literally going up against people that have PhDs in rocket science and quantum mechanics and advanced mathematics. And these people are your competition. They are also trying to be professional traders and make as much money as they possibly can. And it's like, to get to that level, you have to do a lot of learning. You have to do a lot of learning, and you have to be able to take the information that you learned and apply it to the charts every day, so that way you can understand what is actually happening as you see the story of the market unfold. So, I know personally, I am very, very, very confident in my trades now because I trust the knowledge that I've learned and the insights that I've learned about the market. So when I'm seeing these different movements in price action take place, it's telling me a story. And when I started to understand that story and really trust my ability to read it, that's when I got much more confident in my trades, and I was able to execute trades at a way higher success rate. So, I just encourage everybody, don't just go on YouTube or listen to somebody else tell you a strategy, and then you learn that strategy, and then you go and back test it, and you trade it, and, you get a 65 or 70% win rate, and you're just satisfied with it. And then that is the best you're ever going to do. And all you're going to do is continuously go back test that strategy over and over and over again, but never really understand why it wins sometimes or loses other times. And then also take the time to learn about all of the other things that are going on in the market, right? Liquidity sweeps, fair value gaps, order blocks, VWAP, mean reversion, high time frame liquidity targets, high time frame rejections, candlestick patterns, price action patterns, anything that you can learn that you can apply in conjunction with your strategy to help you determine, when is my strategy going to win and when is my strategy going to lose. So anyways, I hope everybody got a little bit of value out of this. I hope this inspires you to go do some research and to learn a little bit more about all of the different things that are taking place on the chart, so that way you can build that confidence in your strategy, and so you can take whatever strategy it is that you are trading and optimize it for the highest win rate and the highest expectancy.